Welcome to Capital Market in the Security Analysis video 1. I am Balai Zaude. I hold 2 master's degree in developmental economics and another in accounting and finance. I am currently pursuing an MSc in financial engineering at Worley Canton University, USA, and a master's in project management at Florida State Eastern University. I have served as part-time lecturer at various academic institutions that bring practical experience from Central Bank of Ethiopia, where I have worked in departments such as internal audit and risk management, insurance supervision, and currently served as senior researcher. With a strong blend of academic and professional experience, I am passionate about helping you understand microeconomics, capital markets, research methodology, and other related fields. Whether you are students or professional, this course is designed for you. So please subscribe, share, and like as well as give a comment. Let us start. What you will see in this subject, we will see under this subject, part 1, Introduction to Financial System, part 2, Basic Mathematics for Capital Markets, part 3, Money Market and its Operation, part 4, Foreign Exchange Market and its Operation, part 5, Analysis and Evaluation of Equity Security or Stock Markets, part 6, Analysis and Evaluation of Debt Security or Bond Markets, part 7, Derivative Market and its Operation, 8, Analysis of Risk and Return in Capital Markets. And also we will see what is capital market, what is financial system, what is system in financial system, and also what is money markets in the capital market and the like. Part 1, Introduction to Financial System. The overview of financial system. There is a demand and a supply in financial markets as commodity markets. Like commodity markets, there is a demand and a supply of the financial assets. For this, there is intermediary between both, between demand and the supply, that links both demand and the supply together in financial markets. Those intermediaries are called as financial institutions. For example, the banks, saving and loans, saving banks, credit union, insurance companies, pension funds, and the other financial institutions that you know. Supply of the funds can directly related or direct transaction with demand of the funds, or they can get each other in financial markets. With this, there is a money markets or short-term, capital markets or a long-term. This is short-term, for example, a treasury bill, which is this is depending on their maturities. Treasury bill, for example, maturity is less than 1 year in the 1 years. That is, for example, 28 days or 91 days, the maturity of treasury bill, 182 days and the 365 days. This is short term, or it is money markets. Or capital markets, the maturity is more than 1 year, that is 5 years. 10 years, 20 years and above. This is capital market. We call it as capital market. When we come to the definition of financial system, first, what is a system in financial system? The term system in financial system indicates group of complex and closely interconnected institutions, markets, and instruments such as bonds or other securities, procedure or steps or policies, service provided by financial institution, transaction, that is undertaking of exchanges with an economy. It could be defined at international level or regional level or organizational level. It is the systems that cover financial transaction and the exchange of money between investors, lenders, and borrowers. If there is a lenders, the borrower is investors, or investor can borrow, or also lender can be investors, because investment is starting from having of monies. If you have money, you can invest in security, or you can invest in somewhere other else. The components of financial systems, as you know, financial system consists of financial institution. That means without financial institutions, there is no financial system. Financial markets, that is a place, invisible place, that can we exchange our financial asset with money or currencies. Financial instruments, that is instruments such as bonds, other securities. Financial service that's provided by banker, for example, learning activities or borrowing or deposit activities. Such activities that undertake or performed by a banker is known as financial service, currency, or monies. Then, as we see on the above the PowerPoint, there are 5 components of financial system. More or less, there are 5. There is also another that we have, but for now, we will see these 5 components of financial system. Those are financial markets. It is a platforms or a place or a system or mechanism where financial assets are exchanged. It is invisible place. It is not for physical one, or it is not tangible, or we cannot observe financial markets. But ideally, it is a place where financial instruments are exchanged with money, or financial assets are exchanged. Financial markets facilitate the market actors or agents of the market, that is demand and supply, to buy and sell financial instruments such as bonds, stock, various international currencies such as, for example, dollars, euros, and the like. And also there is a derivatives, that is kinds of financial assets that we will see in the future. It facilitates also interconnection between those who need capital, who has or who have shortage of funds, with those who have capital to invest, or who have a surplus of funds. And this is how they are interconnected by using financial market, or financial market can interact those or link those both of them. The other components of financial systems are financial instruments. They are also known as financial asset or financial securities. We can also take commodities such as maize or wheat or rice or other commodity, like we can take it because financial assets or like commodity assets in commodity markets, we can purchase or we can sell financial asset like that of Macy's or like that of Weights. We can sell and also we can purchase financial asset like what we do in commodity markets. They are the product which are traded in financial markets. They are called as a product because there is a commodity products, or we have commodity markets, place where we can exchange commodities with money. Like that, we have financial markets that we can exchange financial asset or financial security. So they are the same. The nature is, if so the nature is the same, the others or different, the activity is the same. We can sell, we can purchase. Now the entities that agree to make future cash payment is called issuer of the financial asset, or we can call issuer as borrower because it can borrow from lenders, which is known as holder or owner of financial assets. The holder or owners are called as also lenders. The issuer of financial asset is known as borrower because they borrow money by giving that financial asset or securities. The other components of financial systems are financial institution or intermediaries. Financial institution or intermediaries example are banks. Why they call intermediaries? Because they link both lender and the borrower. They facilitate smooth working of the financial system by mobilizing the savings of investors either directly or indirectly via financial market by making use of different financial instruments, as well as in the process using service of numerous financial service providers. The common types of financial institutions include commercial banks, investment banks, insurance companies, pension funds, mutual funds, and the like. The other components of financial system is financial service. Financial institutions, markets, and the instrument to be able to carry out their jobs. They need several services of financial natures. What bankers undertake or all activity of the bankers are financial service. They are the economic service provided in the financial system. Money, it is a cash, or it is the same with cash. Money is the same with cash. That includes coins or currencies, money order, check, bank drafts, bank deposits that are available for unrestricted withdrawal from banks and the other financial institutions. It is any medium of exchange that a bank will accept at face value for deposit in the immediate credit to depositors' accounts. It is basis for measuring and accounting for all other items. Monies that used as medium of exchanges, or monies that used for measuring of the assets, or used as store of values, or it is units of the accounts. By saying this one, let us come to the role of financial system in economy. What is the function, or what is the role of financial system in economy? For example, in economic growth. Financial system development is linked to economic growth. How? Institutional composition of the financial system may change from place to place. However, the basic function of financial system are essentially the same in all economies. They are the same, even though they can change or move from one area to another area. What it did in America will do in European, also do in African, also do in Asian countries. The basic function is the same. The role of a financial system is to facilitate production, employment, and the consumption too. Let us see each of them. The function or role of financial systems are pooling of funds. The pooling of funds. Financial system transfers the saving of the people from household to business organization. This is the financial system gathers saving from individuals, households, business, and the institution, and channels them into productive use. Banks, pension funds, mutual funds collect a small amount from many savers and combine them into large pool, which can then be lent or invested in big projects. Example, a bank collects deposits from thousands of the people and they use that money to give loan to the business. This is how it's pooling of funds. The second function or role of financial systems are capital formation. A financial system mobilizes saving which leads to capital formation or financial decisions. Financial system help transform savings into investment by providing platforms like stock markets, banks, and investment firms. It enables business to raise capital to grow and expand. Example, a company issues shares through the stock market to raise money to build a new factory. This is how capital formation is occurred. Allocation of funds. Financial system takes into account the various needs of different entities for product purpose. This is investment decision. Allocation of funds ensures that the collected funds are directed toward the most efficient and productive sectors. This is done based on a risk return and a creditworthiness, helping the economy use its resource wisely. Example, banks evaluate loan applications and choose projects that are likely to be successful and profitable. Through this, we can do allocation of funds. The fourth one is facilitates payments. A new method of payment like e-banking service checks it is facilitate quick and easy uh, transactions. This financial system provides secure and efficient payment mechanism. This is one, it is secure, that helps individuals in the business conduct transaction easily. Example, paying for goods online using mobile banking or credit card is how this facilitates the payment. The other, provide liquidity. Financial system provides investors the opportunity to liquidate their investment, which are in instruments like share, debentures, and bonds. Liquidity means the easy with which the asset can convert into cash. The financial system provide market like stock exchanges or money markets where investors can quickly sell assets if they need cash. Example, selling share on the stock market and getting money within a few days is a kind of providing liquidities. The sixth one is risk function or management. Financial system provide protection against life, property, and liability risks. Uh, these financial institutions help individuals and the business manage risk through service like insurances, derivatives, and the diversification. This tool spreads or transfer financial risks over the pool. Example, a farmer buys crop insurance to protect against poor harvest due to drought. This is how risk is managed through financial system. The other is better decision. Financial system provide information about the market and the various financial assets so that investors to compare different investment options and they choose the best one. Access to accurate financial data and analysis help individual business and the government make informed decision about saving, about investment, and about spending. Example, Investors use financial reports and the market analysis to decide which stock to buy. This is how they can decide better decision. The eighth one is finance government needs. Government needs huge amount of money for the development of defenses, economic and social welfare activities. The government raises funds for development, infrastructure, public service by borrowing from financial markets through bonds and the treasury bills. Example, the Ethiopian government issued treasury bills to fund road construction or education program. There is also another funding mechanism through financial system. Then final one is economic development. So credits can be made available to corporate at cheaper rates, and this leads to economic development of the nation. Or by efficient mobilizing savings and channeling them into investment, the financial system support for creation, business growth, infrastructure developments, and overall economic prosperities. Example, a well-functioning banking sector in Ethiopia helps entrepreneurs access to loan to start new business, contributing to GDP growth. This is the role of financial system in economy. I thank you very much for your attention and also for your comments. If you liked my work, don't forget to like, share, subscribe, comments. So have a nice time. We will meet with the next slide in the next time.